Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of XRP, reviewing the recent price action and where I think things are heading next. As I get into the video, smash that like button if you do appreciate it. And if you are new to the channel, why not go ahead and subscribe? Tapping the bell and selecting all the notifications will ensure you do not miss another video update. And considering we are ramping up the amount of video production that we are doing at this channel, then you might want to consider tapping that bell. Let's go ahead and jump right down into today's video, kicking things off with the 1 hour time frame here for XRP. So XRP paired up with USDT on the BitGet spot exchange 1 hour time frame. We're going to be taking a look at smart money concepts and Elliott wave theory, so a little bit more complex than maybe just drawing some trend lines, but very accurate nonetheless. So let's go ahead and jump down into where we currently sit. So we had the C wave high right in between the 50.481 and the 51.246. We then rallied up and started to break back down again, finding support at the moment on the 200 EMA and finding resistance on the 50 EMA, kind of sandwiched between the two at the moment. I suspect we're ready for a break upwards a little bit here before we continue our move to the downside. I think initially what we're going to be looking for here is a three-wave pattern starting here, and then down in towards equilibrium. If we take a look at this, equilibrium is basically between 50% move between the swing high and the swing low, essentially. You can see that our equilibrium would be on the 1-to-1 and the 1.236. Current target range for our move to the downside here will be 47.824 and 48.303. So actually, I'll read these numbers correctly. You can tell it's early in the morning. Apologies, guys. It would be 47.828 and 48.303. Okay, so that's going to be the C wave low point. But before we have that break to the downside, I suspect we have to bounce upwards here a little bit. We are in an oversold area. I suspect a move up before moving down. So I would expect us to kind of see this as a wave, come up for a B, and then move on down into that C. And it might just truncate, not quite hit those levels, or it could be a 5-wave drop, like a 335, just flat correction, something to that effect, because we have a lot of overlap here, and be a little bit cautious with that. But for the most part, the target is the target for now on this hourly chart. So for the most part, not a lot to talk about on the hourly today. It does look to be very much just kind of really slow and boring. But for the most part, this is kind of where I think we are heading. Now, when it comes to the larger timeframes, I think this is where things really kind of come together a little bit more clearly. So here we have the daily time frame. Again, still using the BitGet spot exchange. You can see that we do have a death cross looming on the daily time frame. So you have your 200 exponential moving average, that is your white line, and then your yellow line is your 50 moving average. Okay, and when these two things cross, it basically means short-term price action is going lower than the longer-term price action, and essentially people call that a death cross. Now, when it comes to a death cross, it's only showing you what's already happened, but people will react to it thinking that it's going to cause, mass panic, or it's going to basically force price action to the downside. It's a self-fulfilling prophecy, because the actual understanding here is that these lines, the moving average and the exponential moving average, only show you the candles in the past, right? 200 candlesticks for exponential moving average and 50 candlesticks for moving average. And so the short-term price action, 50 moving candles or 50 candles moving average of those candles, and then you have your 200 longer term. Basically, when they cross, it's just telling you that most recently, over the last 50 candles, the average price has come down lower than the longer term average price of 200 candles. And so it's only showing you what's happened, but people will react to it, and therefore it becomes a self-fulfilling prophecy. When they see the cross of these lines, they panic sell, and as such, price goes down. Self-fulfilling prophecy. And so we still target down here. We're in our structure for a fifth wave movement, regardless of the death cross. We still have further to the downside. So the two things kind of line up, I guess. But we're looking at 35.17 to 39.2 cent on the fifth wave low from an Elliott wave theory point of view. Then we'll bounce up into a wave 4 and then have a final fifth wave move to the downside. That will take us down to 30 to 33.9. Then once all that happens, I suspect we actually have a more significant bounce upwards, probably retesting some of those existing highs. potentially around some of these resistances that we saw previously. So the first one of interest would be 53 to 58, and then a little bit higher if we were to rally that way would be 66 to 70 cent. Once complete though, because we had a 5-wave move, if this does actually play out as it has drawn here, then we would expect another 5-wave move to the downside, and we'll probably talk about dropping down towards 25 cent or so. So for now, we're not going to worry about that because, you know, those are way off in the future, months and months down the line. But for now, we need to consider we are in a bearish structure. We're bearish here, and that's proven otherwise. The only way that we can break out of this structure is if price goes up higher than 27. Sorry, it only goes up higher than 20. And I can't get my numbers out today, can I? Man, this is a bad video. I apologize. Right, 67.5. So we need price to rally up higher than 67.5 cent if we want to break out of this structure. Okay, it's the only way that that's going to happen. So if we cannot rally as high as 67.5, then unfortunately we have to complete these patterns to the downside, and we have to kind of come into the 35 to 39 cent range. Okay, once we complete this and we have that 5th wave target confirmed, then our break out of structure does change. It actually becomes a little bit lower and a little bit easier to achieve. Okay, so that would actually be down here on the wick low at 66.8. Okay, so we have it a little bit lower for potentially seeing a wave 4 break that pattern. But for now, you know, it doesn't look like it's going to happen. So we have to consider everything that we see here, which is that we are finding a death cross looming. We are in a 5-wave move, an impulsive structured move to the downside from an Elliott wave theory point of view. We are in an overbought stochastic RSI on this time frame. If we go ahead and take a look at the volumes are actually really low at the moment, so they're not actually going to be helping us push the price up higher. You can see the RSI has bounced up a bit and is already starting to turn back down, and so not looking strong there. Divergences, no divergences to be seen, so there's no bullish divergence to help us kind of rally on out of here, and in the same way that there's no bearish divergences either. And so for the most part, everything just looks like it has to kind of complete the pattern, which is further to the downside for XRP. Now, when we take a look at it from a weekly standpoint, what do we see? Well, we can see that we hit the high wave, C wave high targets, and we've rallied on down. This actually came down lower than we wanted it to. We wanted to find support at 52 to 58. We lost that. At the moment, we're finding support around the 200 EMA, as historically, as you can see here on the weekly time frame. But at the moment, we're still not looking strong around here either. So a lot of weakness can be seen, and we're just kind of waiting to see whether or not we can actually complete the pattern and bounce, because we do need to see a bounce on the weekly time frame. We are in an oversold area. We just are not ready for that just yet. So we'll keep a close eye on it, but from a weekly standpoint, I don't think we're necessarily where we need to be just yet. Expect further to the downside before we bounce on up a little bit higher. But let me know what your thoughts are on the price action in the comments below. Are you looking forward to maybe some cheaper prices, or do you think, like, you know, it's in now, we're not going to be seeing any cheaper, we're just going to, you know, $589? Let me know your thoughts in the comments below. I'm going to wrap this video up right there. If you found it useful, smash the like button. If you're new to the channel, subscribe, and I'll catch you all in the next one.